Whoa! Oh, I clickbaited you good, didn't I? I sent my thumbnail out there to the YouTube river and I just clickbaited you good. Look at this. Fishing pole. It's chopstick. Please don't click away. In this video, I'm going to be revealing the biggest investment secret that really no one tells you. I was gonna tease it to the end of the video like a jerk, let this shit carry on. That's not cool. I already did this stupid clickbait thing. Anyways, here it is right now in the first minute. Biggest investment secret. The market always goes up eventually. That's it. That's the biggest secret. Now, you could unclickbait away if you want, swipe and say, screw this guy, totally cool. But I'm going to be explaining why in this video. So it's stupidly simple, but it should put your fears to rest about whether investing is the right choice for you at all. It absolutely is. Let me just throw this catch of the day here on the grill. I'll be with you after the intro video. Well, hey there, folks. Thanks for coming back. Okay, so the dirty little secret is the market always goes up. Sure, there are dips and blips and smashes and crashes. I'll eat this later. But ultimately, the market will always go up. All right, don't believe me, don't take my word for it, but just open up your Google machine and type in stock market history. You'll most likely come across the Dow Jones Industrial Average. Now, this is one of many stock market indices. You may have also heard of the S&P 500, the NASDAQ Composite, the C3PO, the R2D2. Those last two were Star Wars characters, just making sure you're paying attention. A stock market index is responsible for tracking stock price performance. Think about it like you and your girls spending your Saturday at the mall. You got some bubble teas, you're walking, you're laughing, having good times. And all of a sudden, you see Jake from your class. He's wearing like that sexy denim jacket. He gives it a little wink. You're like, damn, I look good today. You're feeling all great. Where the hell am I going with this? So anyways, you and your girls are in the mall and then you turn the corner and you see your favorite high-end department store, Dow Jones. Now, Dow Jones contains quality, handmade fashion from 30 of the best designers. Now, this isn't fast fashion we're talking about. This is high quality stuff that lasts for years. This place, Dow Jones, is an institution. But of course, like any good business, there are people watching the performance of these designers, these 30 amazing designers, to see how well they do. And every once in a while, a designer that's failing to perform will get taken off the shelf and replaced with another designer. Now, this cycle will continue, so Dow Jones is always growing and is always staying on trend. This is a metaphor for, you guessed it, the Dow Jones Industrial Average Stock Market Index. It tracks the performance of 30 large American companies, which isn't as much as some of the younger, hipper ones now, such as the S&P 500 and the NASDAQ Composite. But what the Dow Jones does have as a big advantage is it is the oldest, longest. It has 120 years of stock market history that we can pull on. And to my earlier point, surprise, the Dow Jones is way up from where it was when it started back in 1896. But why? Why does the market always go up? Well, it's simple, really. The world keeps growing. We've created industries and built things and created industries that build things. And these indices that track the market, such as the Dow Jones, will go up and continue to go up because of something called upward bias. Now, what this means is a company can go to zero, but really there is no cap on a company's upside, how much potential it has to grow. And any company that fails to perform is dropped from the index and then replaced with yet another company that has limitless potential. That being said, it is a bumpy road along the way, full of what's known as bull markets and bear markets. In short, a bull market is when the market is going up. People are singing and dancing, everyone's making money, people are making love in the streets. It's a fantastic time. Reversely, a bear market feels like you're Leo DiCaprio in The Revenant and the bear market is the bear, and you saw what the hell happened there, right? Yeah. The market is going down over time. Some people are panicking. Some guy in a cheap suit's on TV talking about how, your soul can't be saved, everything's going to hell, and what the hell is he talking about? Now, to put your fears at rest, take a look at this chart from Investopedia. Now, those scary bear markets are those cute and cuddly bears in red at the bottom. And the giant green things you see here are the mighty bulls with their strong bull testicles. The big takeaway here is that for every scary moment in the market, such as the crash of 1987 and the financial crisis of 2008, there has been a wicked recovery that has spanned years. When everyone is panicked, smart money is buying at cheaper prices during the bear market. Now, if you buy into the market and stay in the market, you will see your money grow over time. Okay, so what about the financial experts that you hear speaking? What about, your Uncle Tony says, the crash is coming soon. Should you wait? Should you buy then? Well, much like the financial experts, your Uncle Tony doesn't know what he's talking about. And he doesn't wear enough deodorant. The longer you spend in the space, the more you'll kind of find out that people really don't know at the end of the day. They're using previous history, previous data to predict the future, but the future is always changing. So that's not an accurate representation of where we could be going. Some people want to be the Nostradamus of stocks and Stockstradamus, but no one has the ability to predict the future. But it's hard when you're in this space to silence all the noise. You'll get a lot of clickbait thrown at you on YouTube. You get the news stories automatically sent to your phone with the juicy headlines. How do you calmly just invest and persist? Well, the noise isn't going away. But think about it like this. Let's say you join a group that is taking up the recreational activity of mountain climbing. Now, why, you may ask? I don't know. I wouldn't do it. Personally, I think you're nuts. But let's just use it for this analogy. Now, we're all familiar with the rocky, arduous path of scaling a mountain. It's an ordeal, up and down as you climb to the top. Now, did I mention the group that you're with? Like all tour groups, they're very, very annoying. They're not disciplined and focused like you. Among the group, you hear things like, "It's too cold, my feet hurt. This is taking too long.
Where can I get a Wi-Fi signal? Where can I get a Wi-Fi signal? Where can I get a Wi-Fi signal?"
You're hearing all this noise, but check this out. As we zoom out, all the noise just fades away.
Where can I get a Wi-Fi?
It's too cold, man.
Calm. Silence. You can see the whole mountain. You can see the peak. So next time you find yourself overwhelmed with the noise, the fear, the greed, just take out your phone and smash it on the ground. I'm just kidding. But look, open up the stocks app. Search up a market index such as the Dow Jones Industrial Average. Yikes. Look at those big falls. Okay, now time to zoom out. Hit the 5-year. Hit the 10-year. Hit all. Zoom out and see the big picture and how long-term investing will get you to higher ground and how in the short term there are just bumps along the way. In conclusion, look, if you just believe in general that the quality of life gets better over time, if you believe that goods and services improve, if you believe in innovation, if you believe in technology, if you believe in any and all these things, then investing is the right choice for you. And if you're asking, well, what do I buy? When? Do I sell? When do I sell? Well, you can actually buy the whole market itself. I personally invest in the S&P 500 because it contains 500 American companies. It's heavily weighted in technology stocks. Buying an index fund is how you can buy the market. And this has been proven to be better than stock picking and market timing. In the end, it's investing. It's not trading. How much do you buy? Well, buy as much as you can in a way that doesn't affect any of your expense money, such as your emergency fund. When do you sell? Preferably never. But we'll cover wealth preservation in later videos. Really, you're probably at a point where you're spending most of your life wealth accumulating. We're not cashing out yet. When do I start? Now! Go! Get out of here! Go do more research. Don't let my irresistible charm clickbait you into another video. That being said, a lot more videos to come. I will bait you again. I am the master. I am the master baiter. Wait, what? Hey, where'd that lemon go? We also have our free tool called Whoop Assets. The link is in the description, so open up a can of Whoop Assets.